On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. The New Zealand dollar has rebounded strongly in the last couple of months. Over the last week or so, it's been sitting comfortably above US 63 cents, which is up 8% from being below 59 cents against the US dollar in late July. That's the highest we've seen in more than a year, and it's not too far from the long-term average of US 66 cents. There are a few different reasons for this surge, and they're not all about us. The first rate cut in more than 4 years from the Federal Reserve in the US was a factor, especially because it was bigger than some were expecting. Financial markets have also taken a fairly aggressive view on how quickly the Fed will cut from here, with the policy rate in the US expected to reach its nadir of about 3% within a year. We've seen rate cuts in Europe as well and in the UK, and obviously here in New Zealand too, but that first move from the Fed was bigger and bolder, and that's made for a wider interest rate differential between us and them. The US dollar index is down more than 5% in the past few months, which means the greenback has weakened against most currencies, not just us here in New Zealand. The Fed's desire to act quickly and proactively has also, at least in the eyes of investors, reduced the chances of a recession in the world's biggest economy. That improving optimism about the future has also pushed us higher. The Kiwi dollar is what they call a cyclical currency, and that means it tends to follow the economic cycle, rising when sentiment is upbeat and often falling during times of uncertainty. The US dollar is the opposite, and when people are worried about the outlook, they tend to flock to the safety of the greenback. Last but not least, the Kiwi dollar does tend to follow dairy prices quite closely, at least in a directional sense, and the fortunes of the agricultural sector can have a big impact on the currency. That's unsurprising, as the economy overall is still highly dependent on our biggest commodity export. At the moment, global dairy prices are up more than 12% so far in 2024, and they've rebounded to be pretty close to 2-year highs. That strength has allowed Fonterra to increase its milk price forecast more than once, and just last week it increased it 50 cents for the current season, 2024-2025. That sees the midpoint of its forecast reach $9, and that would make for this season's payout to be second only through history to the $9.30 we saw in that record season a few years ago, 2021-2022. Whether a stronger New Zealand dollar is good or bad or not depends on your perspective. Our export sector would probably prefer it to be a little bit lower, as that increases competitiveness on the global stage, and it means in New Zealand dollar terms, our exports are making more money. However, the recent strength might be lending a hand to the Reserve Bank as well in its ongoing battle against inflation. Imported inflation, or tradables inflation as they call it, represents about 40% of the inflation basket. And you think about things like food, clothing, furniture, transport, because of fuel and oil prices, all of those things are quite sensitive to currency movements. And a stronger Kiwi dollar means we can buy more of them or the same amount more cheaply. So it's good for consumers of imported products. That keeps a lid on inflation, and because of it, a stronger currency should ensure that we do see a steady decline in the OCR from here. Falling interest rates will continue. Demand for the Kiwi dollar typically decreases when it's offering a lower yield. If investors overseas are being offered lower interest rates for their New Zealand dollars, that in turn should act as a handbrake on further currency strength. So it is somewhat self-regulating. Higher currency means lower inflation, which means lower interest rates, and that in turn can put a little bit of downward pressure on the currency. At that 63-cent level, the Kiwi dollar is still trading about 5% below its long-term average against the US dollar. However, it's worth noting that while our US dollar exchange rate gets all the attention, it is kind of the odd one out at the moment. Against the Australian dollar, the British pound, the euro, the Japanese yen, all of those currencies, the New Zealand dollar is stronger than it's historically been. So we're weaker against the US dollar compared to history, but compared to all those other currencies that I've mentioned, we are above our long-term average by varying degrees. The Reserve Bank's trade weighted index, the TWI, or the TWI as people call it, applies different weights to the currencies of all of our major trading partners, and they do that based on how much business we do with them in a trading sense. So at the moment, the Kiwi dollar is about 7% above its long-term average against the TWI, despite the fact that we're a little on the soft side against the US dollar and the Chinese renminbi as well. Currencies are notoriously difficult to forecast over short time frames. It's all relative, but the next move from the world's respective central banks might determine where currencies head in the immediate future. If the Reserve Bank of New Zealand chose to do a bigger than expected OCR cut this month, say a 50 basis point cut, and that surprised people, you might then see the Kiwi dollar gap down a little bit more than expected. However, if they keep moving in 25 basis point increments and you get a more aggressive Federal Reserve that is willing to act more proactively, you could see the strength in the New Zealand dollar continue as the greenback does remain soft. Looking ahead to next year, 2025, I suspect the fortunes of our currency will be closely linked to global economic conditions. If the positive tone continues across markets, we could see the Kiwi push a little bit higher. However, if there's a bout of uncertainty, renewed risk aversion, recessionary risks, anything out there that spooks markets or investors, we might quickly find ourselves back in the 50s before you know it.
For more insights, visit craigsip.com.